Good afternoon. 1:13 p.m. Pacific Standard Time, 12/10/2012. What we are going to present to the MMTs and other people in various programs we have is the S&P 500 monthly chart. I'm going to show you here what the trend tool, one of the things that we're going to be looking for is that you can see back in 2009, we know that story right there. We've made higher highs and we've had these yearly reversals. Look at the 2011 lows. This was last year. We burnt up to the highs, we pulled back, but we continued to make higher highs. We know that that was 5.5 year highs or somewhere in this area across all indexes. But here, let's zoom in more so of where the S&P 500 had undercut its 10-month moving average here, right down to its major support line. We're going right across here. What I would say is that we have closed back above the 10-month and we are sitting right above this major level here. Remember, our long-term support line was 1350 on the S&P. And that's when we were putting in these double monthly top highs where price was exhausted and we had the reversals down to these lows. This is all of your fiscal cliff. Mr. Bonner, excuse me, and Mr. Obama, President Obama, are going to be coming out and they're going to be talking about the fiscal cliff. This is how the fiscal cliff has been treated during this time frame. So, once again, these prior lows of 1350 are still in play based on the volatility of the U.S. government and how they solve their issues. As to what markets would do or not do, they would sell down, and they will. But if they come to a resolution, then there's what we call a Santa Claus rally on top of it. And the S&P 500 closes right here at 1418, up 0.48. S&P 500, 1418.55. One of the things we'll tell you is that the 10-month moving average is right now at 1395.23. It'll change, but we're sitting on top of that as that support level. That's today. Now, let's take a look at the Dow, where there's 30 components in there. And let's blow up the chart on the Dow, going back years. But let's take a look. It too is above the 10-month moving average. And this is the month of December. So you can see what the prior month was. We made the lows down here. We got below. We always told everyone 12.5 was where we would land. And we landed on that 20-month moving average and bounced like a rocket right here. And we're all about the fiscal cliff right now. Same story for the S&Ps, the same story with the U.S. government here. And yes, they have used some Dow components to get higher moves like McDonald's today. Okay. Now, let's take a look at the Nasdaq Composite. It too on a monthly level, like everything else this time of year. We always said this was to be the strong point of the year, November and December. So we put the lows in right here in November through that calendar month at 2810 over here. Now our lows starting 12/1, December 1 of 2012, our lows were 2958.26. And our previous lows were 2810.8 in the month of November. So we've come up in value here. I want you to know, though, that this 10-month moving average is not on positive volume. The fiscal cliff remains very high level of disappointment. If they don't decide their problems, we can sell down and we'll sell down and we'll sell down and we'll hit that 20-month moving average and we'll go lower. That is that case. However, there is a flip side. There's an upside to it. If they come out and get a resolution and everybody is agreed upon and they like that and it would be good for everyone involved, you could get a great bull rally right back up to the highs. Yes, you could on the Nasdaq Composite. And same thing here on the S&P 500. That I show you right here. I show you that these tops over here depends on which way the government wants to go. But you're either going to get a great rally to the upside or you're going to get a miserable rally to the downside. It's either going to be either or. Volume and opinion and conviction by buyers and sellers will be the result. That's what we'll base our opinion on. But let us not be dumbfounded that December is the time to do that. Can the government give you that as your Santa Claus rally? That's what I'm saying. That's why I'm going over the monthly charts with you here and now. And once again, the Nasdaq Composite, like I said, it's negative volume right here on the 10 months. It does come off of the 20 months major support level right here, just like the S&P 500 had. This was that major support level down here from that reversal high of 3,200. Now, that's almost like 400 points now. And then we're going with the market corrections at the better time of the year for people, and that is going to be your December rally. But we had part of it already in November off of this big wick here at that 20 month. That stands for every one of these indexes across the board now. So we're going to keep that in reality now. But I will tell you that that was part of the Christmas rally, and we're right here in the final month of when Santa Claus comes on the 24th and the 25th. Do your lawmakers provide you this upside move? We'll find out. We'll take the move if it goes this way, or if it wants to come back down here in disappointment, and they want to go over the cliff, as everyone says. Fine. Then we'll have to take that side of the market. So there would be a big trade to the downside, and there'd be lots of profits made. And once again, I'm going to conclude a monthly update during this moment in time, 1/19/2010. The time is 1:19 p.m. And the date, well, we already know what that is. It's 2012 and it's 12/10. We have 10 days have gone by in December. That's why I'm being funny about saying it the way I'm saying it. In 10 days we haven't got a resolution, because we haven't. So, once again, this is a perfect prime example of how markets can be held hostage and why people don't want to commit to capital. There's a lot of reasons, but this is where we're at. And we've had 10 days of December. The election has been over. When will these lawmakers come to the conclusion of what's good so that they can come to an agreement to give all of you folks a big rally? That's what we'd like to see. But if they don't, it would be a big disappointment. We're going to come back down and break these lows. That's the way it's going to be in all of these indexes. And you must be on high alert. And remember, you want to pick off the good quality stocks, because if we do get a sell down because of the government, then certain stocks are going to be on sale. And then that's when you better have your shopping list in order, because the good ones are going to survive, and the ones that keep making money, they're going to survive. So it will become a stock picker's market in 2013. I'm giving a final update once again on this very wonderful Monday in the 10th day, once again, of December 10th, 2012, 1:21 p.m. We'll find out what they come with. And probably the announcement will either come after the closes or before the opens in the morning. But it's how that market is going to respond to it. And let it be known that this is called a knee-jerk reaction trade. And what does that mean? It's based on hyped up volatility to the upside or negative volatility to the downside. Doesn't matter to us. We just trade the direction it's going to go in and make profits.